Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets buried in company reports. And let me tell you, BTCS Inc. has just dropped a report that's got us diving deep into the world of decentralized finance and a whole lot of Ethereum. Let's get straight to it. This report tells a story about a company making some interesting moves by borrowing money using digital assets as collateral. We're talking about using something called AVA Decentralized Finance Platform to get loans of a digital currency called USDT backed by Ethereum. This filing is a standard report that companies have to submit to the government to keep everyone informed about what's going on. It's like a regular check-in to make sure they're being transparent with their investors and the public. Specifically, this is a Form 8K, which is used for reporting significant events that could affect a company's financial situation immediately. Think of it as a breaking news alert from the corporate world. We're looking at BTCS Inc., a company that's very much involved in the crypto space. They're not your typical company, and their financial activities definitely reflect that. They are incorporated in Nevada and have been assigned a commission file number indicating they are a publicly traded entity. Their stock is traded on the Nasdaq Capital Market under the ticker symbol BTCS, so you can track their performance if you're interested. Now for the juicy part, the company has taken out a significant loan. On July 14th, they borrowed an additional $2.34 million worth of USDT, which is a digital currency pegged to the US dollar from something called AVE. This means their total debt on AVE has jumped to about $17.8 million. This isn't just a small loan, it's a substantial amount that puts a spotlight on their financial strategy. Here's where it gets really interesting. To secure these loans, they've put up a huge amount of Ethereum or E16,232 Ethereum tokens, which at the time were worth about $49.1 million. That's a lot of digital gold to back a loan. Now this loan doesn't have a set date to be paid back, but it has a critical condition. If the value of that Ethereum collateral drops too much, they could be forced to sell some of it to cover the loan. This is determined by something called a health factor, which essentially means if the collateral value falls too close to the borrowed amount, their position becomes risky. Think of it like a margin call, but in the crypto world. The interest rate on this loan is not fixed, it can change based on what's happening in the market. At the time they took out this extra loan, the interest rate was about 5.4% per year. But here's a clever part. The Ethereum they put up as collateral isn't just sitting there doing nothing, it's also earning interest. They were getting about 2% on their Ethereum collateral. So when you subtract that from the interest they're paying on the loan, their actual cost for this money is about 3.4%. This is a smart move to offset some of the borrowing costs. So what are they doing with all this borrowed money? They're using it to buy even more Ethereum. This makes sense because they have a business called NodeOps where they stake Ethereum. Staking means they lock up their Ethereum to help run the network, and in return they earn rewards. So they're borrowing money to invest in more assets that they plan to use to earn more rewards. It's a cyclical strategy. The company's leadership has given the green light to borrow up to 40% of their total assets. This shows they are comfortable leveraging their holdings significantly to grow their business. Now let's look at the bigger picture of their cryptocurrency holdings as of July 14th. This table gives us a snapshot of their Ethereum. They acquired a total of 2,731.44 Ethereum tokens. The total cost to acquire these tokens was about $8.24 million. This means their average purchase price per Ethereum was roughly $3,016.73. Their total holdings in Ethereum came out to 31,855 tokens. This number seems a bit off compared to the acquisition number if interpreted as total holdings versus just what was acquired with the loan proceeds. Let's assume this is the total amount after all purchases and movements, and the total value of these holdings was around $96.2 million. That's a significant increase from their purchase price, showing a good return on their Ethereum investments. It's important to note that these Ethereum purchases were funded both by their own cash and by the loans they took out from Avive. This valuation is based on the price of Ethereum being $3,025 on that particular day. Putting it all together, their total crypto and cash holdings were around $100.6 million, which is quite substantial. This last section is just about the documents that come with this report. It mainly points to the digital format of the report itself, which is designed for computers to read easily. And here we have the official sign-off by the company's CEO, Charles W. Allen, dated July 15th. This confirms the report is officially submitted. Now let's look at the bigger picture here. BTCS Inc. is clearly making a bet on Ethereum, and they're using leverage, essentially borrowing money against their crypto holdings to amplify their investments. This strategy is very common in the crypto world, but it comes with significant risk. The company's overall direction seems to be focused on growing its Ethereum holdings and leveraging those holdings through staking via its NodeOps business. The strength here lies in their ability to potentially generate high returns. If Ethereum's price continues to rise and if their staking operations are profitable, they've effectively managed to get a net interest rate of 3.4% on their borrowings, which is a shrewd financial maneuver. However, the primary risk is clear. If the price of Ethereum were to drop significantly, they could face liquidation of their collateral. A 40% loan to asset ratio means they are using a considerable portion of their net worth for borrowing. This is a high risk, high reward strategy. They are also exposed to the volatility of interest rates on RVI, although they've managed to lock in a relatively favorable net cost for now. In my opinion, BTCS Inc. is playing a bold game in the crypto markets. They are actively using financial tools to grow their digital asset portfolio. The strategy of borrowing against assets to acquire more of those same assets is aggressive. While it can lead to exponential gains, it also magnifies losses. Their success will heavily depend on the continued appreciation of Ethereum and their ability to manage their collateral health. For investors, this means understanding the inherent volatility of the cryptocurrency market and the specific risks associated with leveraged crypto positions. It's not for the faint of heart. So that's our breakdown of BTCS Inc.'s latest filing. What's your take on these crypto-centric financial maneuvers? Will they pay off, or is this a risky gamble? Let me know your thoughts in the comments below. If you found this deep dive into BTCS's strategy valuable, please hit that like button and subscribe for more deciphered corporate insights. And don't forget to join our Discord community for even more discussions. The link is in the description. Thanks for watching, and until next time, stay sharp.